How long could Bitcoin's bull market last? We're going to be focusing on the 4-year cycle to answer that question, as well as the halving cycle, but also the pi cycle top indicator. We'll be talking about that and much more. So let's dive right into it. Subscribe to the channel for more videos like this in the future, and let's talk about this 4-year cycle, because the 4-year cycle, essentially every candle 4 is a halving year. 2020 candle 4, 2016 candle 4, and 2024 candle 4. And when we talk about the 4-year cycle in general, the 4-year cycle ends at candle 4, at the very end of candle 4, but the bull market ends at the very candle 1. So candle 1 is where we tend to see a bull market peak. So to answer the question of when could Bitcoin end its bull market, it's not going to be in candle 4, most likely. It's going to be in candle 1, which means 2025. But we have to get a bit more specific about when Bitcoin could end its bull market. And when we look at the halving cycles, and effectively each halving, as you can see, really does build the 4-year cycle, because each candle 4 is a halving year. If we look at the halving cycles, we can have a look that approximately 500 days after the halving is when we see a bull market peak. This was the case in 2017. 518 days after the halving is when we saw a bull market peak. In the 2021 bull market, we saw price rally for 546 days after the halving. So we see a period of just over 500 days after the halving where we tend to see a bull market peak occur for Bitcoin. So if this were to occur in the future, in 2025, we'd see a peak around mid-September 2025 if we are to see history repeat with a 518-day rally to new all-time highs to a bull market peak for Bitcoin, or mid-October 2025 if we see history repeat from this cycle for 546 days after the halving. So anywhere between mid-September and mid-October 2025 is when we'll see the bull market peak. But let's talk about the pi cycle top indicator, because the pi cycle top indicator has been historically a really good indicator for tops in a bull market. We see that these two pi cycle moving averages cross over to develop a bull market peak signal. We saw this also in the mid-cycle. So even mid-cycles, which we might not see anymore in the future, this is becoming a real pi cycle top bull market peak indicator. But we can see that these two moving averages are still very much wide apart. They're wide from each other, and there is no way a crossover is going to occur anytime soon. However, if we focus on the previous video that I made a few days ago, not even a week ago, we propagated and propelled these two moving averages into the future to come up with a December 2024 bull market peak. And this would be a candle 4, right? A candle 4 is where we're going to see a 2024 bull market peak, according to that pi cycle chart. But candle 4 is the halving year, and we still tend to see quite a lot of upside after the candle 4. Right, we tend to see bull market years in candle 4 and candle 1. But the pi cycle top indicator here in this chart from a few days ago, I spoke about how just a small correction could really change the trajectory of these two moving averages. So a few days ago, when Bitcoin was around 44k, the bull market peak, if we propelled these two pi cycle moving averages, would occur in December 2024. But now, if we just change with only a few days have passed since, only an 8% drop into 41k has occurred, and already if we propagate these moving averages, we come up with a February 2025 bull market peak for Bitcoin. And the key thing to mention here is that these two pi cycle moving averages are going to change many times over during this bull market, and any rally towards the upside is going to make this orange pi cycle moving average tilt towards the upside, and even an 8% drop can make it tilt towards the downside and dramatically change the trajectory of this orange pi cycle moving average, and as a result, the bearish crossover, because only a few days ago when price was in 43,800 territory, the pi cycle crossover would occur in December 2024, and with an 8% drop, it will now occur in February 2025. And the thing about this is that we're going to see upside and downside many times over the course of the next few months and years. But we could still see a sharper drop and deeper retrace in the coming months, which is also going to adversely impact the tilt of this pi cycle moving average. And bearing all of this in mind, as we get closer to that mid-September and mid-October time, from this chart right over here, if we see a confluence in the pi cycle moving average where these two moving averages get closer and closer, just like this in this cycle, for instance, or even in this cycle where they get close enough for a pi cycle bearish crossover, it will be really important to see at which point will these two cross over closer to the time in 2025, and how close are they to that mid-September, mid-October time of the year 2025. Really important to watch out for how far apart from each other these pi cycle moving averages will be, and at the same time to watch out for any volatile rallies towards the upside or even drops towards the downside, because this pi cycle moving average is the more sensitive from the two, and it's going to be really impacted by changes in price action. So if this retrace were to continue towards the downside, we'd see the bull market peak date get pushed even more into the future. And you can see that an 8% retrace can push the bull market peak by 3 months into the future. So what if we see another 8% retrace from here? Maybe that pushes things even into the future by another 3 months into May 2025, and so on. So maybe we do need a correction here. Maybe also after that correction, we'll need a consolidation period just to waste a bit of time in this cycle, move a bit sideways for a while. And this will impact the pi cycle moving average by tilting it towards the downside, because at the moment this tilt has accelerated greatly simply because we've seen such a strong rally in Bitcoin's price action in recent weeks. And you can see how the rally and price action has really pulled this pi cycle moving average quite considerably. Whereas here you can see it was relatively flat for a long time because of this consolidation. So this sort of consolidation, even now going into the next few months, going into the halving, whether it's a retrace and then consolidation, whatever the case may be, this is going to make that pi cycle flatline a bit more, make it and its ascent and flicking up to just taper that off a bit and make it go a bit towards the downside, maybe flatline a bit, which will of course postpone the bull market peak for the pi cycle moving average crossover. And that's something we really need to pay attention to, because as price experiences volatility, so will this sensitive pi cycle moving average, and only a small dip can really impact the pi cycle moving average going forward, which is why we need to constantly look at this indicator, realize that we're nowhere close to a crossover occurring anytime soon, and that's quite normal, especially in a halving year, because if we look at previous halving years, you can see that these two moving averages are extremely wide apart from one another. You can see the case here as well in 2016. So this is going to persist, this width between these two moving averages, because we don't tend to see too much volatility in price action when it comes to really rallying towards the upside in a halving year. As you can see, some volatility towards the upside and downside, but nothing too strong. We see a breakout here in 2016 and to the downside towards the upside, but no strong upside in general. Not like we see, for instance, in the post-halving period, where this upside is truly parabolic as well here, parabolic upside. So in a halving year, we will still see volatility, but not too strong of an upside in a parabolic fashion like we can expect in the post-halving period. So in the halving year, we'll still see these pi cycle moving averages be quite far apart from each other, but they will cross over in 2025 most likely, and we'll be making these charts going forward just to keep you in touch with what's going on and when could this pi cycle crossover occur. We're still pushing the can down the road because of this 8% retrace. February 2025 could be that time, but even just looking at the halving cycle for the time being, this can be the guiding light. And we're going to look at the pi cycle crossover as we go along, because the pi cycle crossover can add really strong confluence to these halving cycles. And if we see a confluence with the crossover occurring some 500 days after the halving, then we'll see that this really will be the region to watch out for a bull market peak. So the bull market from now, we can still see over 500 days of the bull market, because the bull market is still very much in its early stages. We have 130 days to the halving plus over 500 days after the halving to enjoy this bull market. So still, the best is yet to come. Subscribe to our channel for more videos like this in the future. Thank you so much for watching. Like this video if you enjoyed this one, and check out the top right hand corner video for more videos going forward. Thank you so much for watching, and I'll speak to you in the next one.